I want to give you guys a little example of as to why you trust your edge, okay? You trust technical analysis, you trust your strategy, and that day trading is simply a numbers game. It's a volume metrics game. Now, what that kind of means is that, let's say, for example, you've got $500. Am I going to be the one to tell you that you can't make money in the stock market? Of course not. If you have $500, maybe you go buy one or two options contracts, you make 50% on that options play, you make some money, you turn around, you put it back into another trade, you lose it all. Next thing you know, you're saying that, day trading is a scam. Everyone loses on day trading. You can't understand why. I'm going to be the first to tell you that the more money you have, this is why hedge funds and institutional traders and big time prop firm traders and big investment company traders, why they make money is because they have the capital to make money. Okay. So if you've ever heard the term, it takes money to make money, trading can be a great profession and a great occupation and a great way to make a living or side, like a side income if you have the money and the capital to do it. And what I mean by that is that if you have an edge or a strategy, it means that you are going to play the volume numbers game. You're going to consistently take trades based on your strategy, and you're going to continue to play the game. Now, the longer you play the game, the more things and the more, kind of hiccups that you're going to go through, the more better understanding of price action that you're going to have. And you're going to understand when to take a trade, when not to take a trade. But if you have a small account, or if you want to make, 100% on the first trade that you take, or you had a big loss and you're trying to recover everything on the next trade, it's just never going to work. You're always going to spin your wheels in the dirt. You're going to constantly be stressed out. You're going to constantly be under the gun. And what I want to tell you is that this is a perfect example on a Tesla trade today to the long side that did not work out. However, if you had a strategy and trusted the strategy and abided by the rules, you would have not only battled back, made back the loss, and then came off the day profitable. Now, what I'm talking about here is we had a big gap down today based off of the numbers in the pre-market session. Tesla did put in a low price of $206.22. Everyone in my community and Discord knows one of my scalping strategies. That is simply using the 5-minute time frame along with the 20 SMA, which is a 20-day moving average. That's that purple line that you see on my screen. And all we are looking for is change in trends, and we're looking to ride the power trend. So what we would be looking at here in this example is that we did have a gap down followed by a lengthy time worth of consolidation. Now you can see here at 7:05 Pacific Standard Time, we get our first change in trend, which is a close over the 20 SMA. So if I simply put a trend line here so we could better see this, that price was $210.18. All we would be looking for is for the next candle to confirm, and this is going to be our entry candle. Now, if you're a hyper scalper where you're going to take excessive sizing and only look for that 50 cents a dollar move maybe very, very quickly, then maybe you would have been able to get into this play and taken a little bit of money off of it and got out. But let's be realistic. Most traders would have lost money on this trade, because if we look at when we got in here at 210.18, it did run up to a price of around 211.36, which is a dollar move. So again, someone who's going to take 10, 15, 20, 30, 40 contracts on a stock like Tesla, then that 50 cents, 75 cents, a dollar move that fast, you would have been able to profit some money, but you need to have had the experience and have done it before to kind of understand when to take profits. But I'm going to give everyone the benefit of the doubt. We're not all that experienced. We're not all that, sharp. We're not all that fast, and we're not all that, savvy to hyper scalping, which is very, very hard to do. So for example, if we would have gotten into this play here, we did put in this high and then we started to backpedal and we closed below the 20 SMA. Now, again, if you do trade with me, you know that this is your clear indication to get out of the trade. We would have had to have cut our losses here, and we would have had to accept that the trade failed. So that entry price of 210.18, we would have gotten out on this candle at 7:25 on the close, and the price was 207.90. big loss. Depending on your position sizing, it would have been a big loss. Maybe it was a moderate loss, maybe it was a small loss, depending on your position sizing. Again, if you were playing one contract, yeah, maybe you were down $100, $200 on the overall play. If you were playing something like 10 contracts, maybe you were down $400, $500, $600 on the play. But I want to give you an example of if you have the money and if you trust the strategy and if you trust your edge and if you play the numbers game, how not only would you have battled back and made back the losses, but you would have come out of this trade extremely profitable. If we just let this consolidate, it never confirmed the lows here, so there was no entry to take a short position. Even if this did confirm this candle's close below the 20, I would not have taken it, because at this stage of the game, being this close to the day's low, this would have been my entry for a short position, would have been through $206.22. Now, being that we never got down there, we got a consolidation period, and then here is our next setup. Our next setup would have come at 7:45 a.m. Pacific Standard Time. Our entry would have been at 750 once we confirmed this price, and we went from an entry price of around 209 at 750 in the morning to a high price of $222. Guys, this move here, okay, this move here from a price of 209, 210, all the way up to a price of 220, 221, 222 is a 10 to 12 point move. That is fantastic. If you entered into this play with the same exact position sizing as your first play, not only would you have eaten back the $2, $3 loss from the first trade, but you would have profited 7, 8, 9 points on the second move, completely wiping away the loss, completely going into the green for the day, and if not going into the green for the day, going into green for the week or the month, depending on your position sizing. Guys, an average position here on Tesla, let's say 5, 10 contracts, and you get a 7, 8, 9, 10 point move, you're looking at a profit margin over $1,000, $2,000, depending on that position sizing. Could have been over $3,000 depending on that position sizing. Again, I can't give an exact price because everyone's account size is different. But for me, example, I would play 10 contracts on a stock like Tesla. This for sure, even with a scale out process, would have been a $1,500 to $2,500 win easily in the bag, just due to the fact that if this is my entry price here and I'm waiting for at least 2 to 3 pushes higher, here would be our first significant push higher, our second push higher, and our third push higher on this candle's close at 216. So from a price of 210 to 216 is a 6 point move. I would have easily scaled out 20, 30, 40, 50% of my position sizing there just to lock in those profits and wipe away this red trade here. And I would have held my runners until we close below the 20 SMA. And that close below the 20 SMA came here at a price of around $220. Now this drawback here would have scared some people and possibly could have shaken people out of their position, which not necessarily would have been a bad thing, because you still would have been very, very green on the day and you still would have walked away with a very, very fat paycheck. But what I'm saying is that as long as we are riding this trending SMA here, there's no reason to get out of the trade, especially if you've already locked in gains here, and especially if you're already green on the day. The worst thing that can happen now is it stops you out here and you're still profitable on the day. The worst thing that can happen here is that we come all the way back down, consolidate for 20, 30 minutes, and then make a bounce higher and allow you to profit even more. That's the worst thing that could have happened. Guys, this is why you have an edge, and this is why you have a strategy, and this is why you take your emotions and your thinking out of the trading game. This is a volume metrics game, meaning we need to have an edge. Do we have one at evolutiontraders.com? Yes. Do we have the capital? If you're watching this video, yes. Do we have the execution skills to be able to do this? If you trade with me, yes. All we now need to do is be reactive to the price action and be reactive to the setups that we're given. Is every day going to be a winning trade? Of course not. Is every trade going to be a winning trade? Of course not. But if you continue to stay disciplined and you continue to stay in the game and you continue to take the trades, you will see that it works. You will see that you can be consistent. You will see that you can be profitable. I hope that helps, guys. My name is D. Anthony with evolutiontraders.com. If you guys would like to trade with me, make sure to check all of the links down in the description box below. Make sure to like, comment, and subscribe on this video, and I will see you guys all on the next one.